A lot of people do not realize that mindset has nothing to do with feeling good. In fact, mindset is about developing a blueprint for winning in battle. Now, I'm talking about trading, of course, but remember, you're up against some of the most prominent minds in the space. Billions of dollars between funds, trillions of dollars in liquidity on a daily basis. The transactions never stop. So, what is stopping you from making money? It's the way that you're approaching things. We're going to break down why the level of logic that you apply to the markets greatly matters and how it will dictate your results in the long term. We're going to start by using some real examples from my trading from last night, and we will break down exactly what it is that I was looking at when taking these trades. Now, I'm going to show you trades across two accounts, but this is the basic premise of my trading. Now, right here, you can see on Monday, we had rallied higher, right? We had this big displacement to the upside, and we were starting to consolidate in this overnight session. To me, what this says is we made a big move, and everyone's hoping that we hold this area as support. We hold it for that higher low to break these equal highs. I was not looking at it that way. In fact, I thought something much different was going to happen. I was expecting us to revisit these lows right here. Why was I expecting that? You might be asking. Well, it's simple. The failure of this bullish setup would set the context for a continuation lower the rest of the week. The reason is when the higher time frame is operating the way that it is, and we're starting to rally and we're just sort of extended over a handful of days. I'm looking for some sort of technical pullback to an area of interest. Now, my area of interest, of course, was this daily fair value gap notated right here. And I wanted to see that get ran. Monday gave a push higher. Tuesday gave the retracement into the range. And that's about it. Most traders are not thinking about things further past the signal. And that's really what's holding them back. Because when you see a bullish candle, you might be thinking, okay, that's a good time to buy. That's the most basic surface level logic you can apply. However, you start to say, well, if I look at this bullish signal and then you add another layer, you're starting to talk about second order cause and effect. It's starting to go up because there's higher highs, higher lows, and that higher low will sequentially give you a higher high. That's not how you need to be looking at it. When you start applying deeper levels of logic, fourth order, fifth order logic, you're starting to think about the implications that happen as a result of these setups failing. Just because this gave a nice bullish setup right here has nothing to do with what price is going to do. The context is we're at all-time highs. We're pushing high on a Monday. How much higher are we going to push in a given week? My way of thinking about this setup, it leans into some of the greatest perspectives that you'll hear from just market legends and big times in the field. If you look at anything about George Soros's fund, there's the concept of reflexivity. And it's the idea that markets, information, and data and things of that nature, it's the perceptions of that matter more. We've all seen it on CPI. It doesn't matter much what the data is, but rather how is it perceived? That will dictate the move in price. But I challenge you to think a step further. Even though the news might be perceived as bad and the reaction on the market might be bad, how often does that completely reverse throughout the day? So whose perception are they trying to influence there? Trading is a battlefield. It's a game where you're designed to lose money. And if you're not applying deeper levels of logic, you're ultimately going to get stuck as a fish in a barrel. You do not want to be an easy target. You want to stay on the move and you want to develop strategies that are unique to your understanding of what happens in price. This right here is a weekly profile that I am considering. High of the week, potentially forming on Monday. Perhaps we trade back here, but as it currently stands, that once bullish area of interest is now our overhead resistance area. So where you might be asking, where do I get involved in this trade? Well, quite simply, I had seen that we were consolidating here, and I did assume that we were going to retrace to about 50% of this range right here. And then eventually reach for this into the overnight session, these lows. To me, this is an area that's very uncommon to be left unfilled, and we did test that. So we are acting as I was expecting this entire time. I was able to take a trade after taking a stop right here. I was in maybe a little bit early. It swept the high, and I was able to get that final entry up here. After getting stopped, I said, you know what? I see what it's doing, and I'll show you on these next slides. So as you can see, 585 on this account, 583 on this account. That gives me $1,000 on the day. I took a $600 loss on each my top step and top one prior. So in these next slides, you'll see why the P&L is a bit much larger. I made back the loss. So we'll go to the trades right here. Right here, this is the trade logic I'm looking at. As we swept above that high where I told you I just got stopped out, and I'll show you again in a second, they created this fair value gap. That's a bullish entry, right? That looks like a good trade. However, the context in which the trap was set defines my ability to take an entry. I'm looking for the short here. Let me ask you this. If you know somebody in real life, you know that they will tell somebody a secret. Like, you know, they'll rat you out, they'll tell somebody. Would you tell them the truth or would you lie to them? You see, first order would be you just respond to the question. Someone asks you a question, you give them an answer. But if you realize that their intentions don't align with your intentions, you can think about it and be like, this person's likely to lie. I could tell them a lie and then add another layer. If they think that you're a liar, they might think you're lying to them. So you could technically tell them the truth. That's how logic works. When a setup fails, it provides an opportunity for a short. It's not as simple as I see a bullish gap, I get long. That's not how you need to be thinking about trading. So as you can see, scaled out 2 entries, basically one for each account at the lows. Going here. This was the setup again on the 1 minute. That's where it swept the high. I took a stop here, saw it consolidating, took the short right there. Easy money. And that's what it looks like as it trails down. So back to the charts. We have to really be thinking about what is price trying to establish. It benefits price to pull back into areas for then further development to the upside to be made. So there are often going to be traps to the upside. There's going to be areas where, oh, it'd be so nice if this held. Think about how many people are dip buying here, dip buying here, dip buying here, because it's all just this, nice bull flag. Why does that benefit the biggest players in the market? It would benefit them more to have people panic sell into here, and then potentially they start to reaccumulate. Or even then, maybe people see this panic and people are thinking this is the time to buy. It's not always how it works. You need to be thinking about what are we actually doing when we're approaching levels of interest. When we sweep a high like this, does it really mean that we're bullish? When we go above by 1 tick, are we breaking out? Is this our uptrend where we're going to see new highs right here? Or is that just a devastating trap to anybody caught in the crossfire? I'm going to go ahead and say it's the latter. And the reason being is that most people see a fair value gap and they do not consider the possibility that that gap might simply serve the purpose as an inversion. It might serve the purpose of getting enough people interested in the market to then get steamrolled. Trading is about thinking outside of the box. You're not trying to reinvent the wheel, but you're also needing to consider the fact that just because something looks like an area where it might be breaking down, there's the opportunity for it to run it higher. I hope you're learning something in these videos. Tell me if you've heard below in the comments about this type of logic. I like to think of it as you're thinking about how people are going to use these strategies. And that's what gives you a good edge. The failure of a setup provides some of the best and easiest gains you'll ever make, honestly. So when you're approaching these charts, just remember, stuff isn't always what it seems. Things are built upon context, and context is only valuable based on your experience and perception of the market. If you have no context, and if you're brand new, none of this stuff will necessarily make sense just yet, because textbooks are not going to show what it looks like for a pattern to kind of work and then fail. They're not going to do that. They're going to give you the understanding that, oh, you just buy when it breaks above the range. They're never going to show you the idea of what about if you short at the top in the middle of nowhere? Because how on earth could they quantify that to somebody that's a brand new trader? How could you tell someone they need to buy right there when all they see is that it's falling off a cliff? You see, price is simply a tool to extract liquidity. It's all it is. There's concentrations of orders in every different pocket of the market. And by simply forcing price to one edge, you're essentially neutralizing one side, and then you're giving people the benefit. The few will profit from the many, and it will never be the other way around because of this type of thinking. Just because something's on the news does not mean that it has to be true. Markets will use information to facilitate reactions in people. Fear and greed are going to drive the market for as long as it's going to be around. So, if you like this type of content, be sure to check out the live streams. Be sure to leave a like, comment down below. And as always, links in the description. Check out Top One Futures, code DTA. Till next time, take care.